my lockdown hairdo, which for the record,
we're now live.
Okay.
We're live.
Serious.
Hi, everybody, and welcome along to today's Sunday Market Analysis. My name is Paul B, I'm the founder of Action's Wealth Online Trading Profits and the Wish Charity Coin. And today, the Action's Wealth trading team are going to come along and they're going to look at the market as it sets up for the week ahead. Heck of a show we've got in store for us. Everybody's in either live or by recording. And what that means is we've got everything you need to trade next week's market. If you want a macro overview, Julian's going to start in a few minutes and give us into the macro stuff. After him will be Alexis talking fundamentals. After that, Ash will come in and get into the data. Ainslie will be in having a look at gold. Shukri will be in having a look at crypto. We cover everything. Ainslie's back on gold. New addition to the show, we've got Orlando coming in talking about the US dollar, and not just the US dollar index, but the US dollar index and the US dollar against other currencies and where to trade them and how to trade them. We've got Gordon Scott coming in and talking about a bit of stocks and Forex as well. Gordon Scott, trading guru. And we've got Lloyd coming into currency strength, and we've got Geoff coming in doing technical analysis. And again, as every week, you guys are welcome to come and spend about an hour with us to get all of this stuff in one go, or you can wait an hour and the recordings will come out and you can watch them one at a time, watch the ones that are relevant to you. I do encourage you to come to the show. I think it's a bloody good show. There is some really good learning for those that want to learn in this stuff. So I do hope you're doing this again. We're going to start off today with macro market overviews by the man in the lockdown, which doesn't allow to see a barber anymore, but our macro markets expert and contract trader trading now around the world in high demand, Julian. Let's hear what's happening with the macro market. I love the gold and silver stuff with Ainslie early on tonight. I thought that was really nice, really clear. There's a pretty simple message in there: buy some gold and silver at some point.
I didn't say that, obviously, Paul, but because we have to put a financial disclaimer on that. Of course, folks, for those of you who are interested in the educational value of that Trader Cafe, by all means, please go and have a look at it. And we are steering you towards a more positive outlook on gold and silver. But don't forget, nobody has any. Okay, so guys, let's get into this. Paul, is that me up? Can I go?
You're up, mate. Off you go.
Okay, perfect. Now look, folks, update. Think last week we talked about the sentiment cycle, right? And I've been nattering on about this for some time. So if you're always thinking about sentiment, here's a great example. I continue to wear my trading jumper because although it's still pretty chilly in Auckland at the moment, so I have to have my trading jumper on a Sunday evening here. We are struggling with lurching our way towards springtime temperatures. It's only about 20 degrees outside. So listen, right, okay, here we go. What are the key things about sentiment? We've just been through a Trader Cafe episode where we've talked about fundamentals and this and that and technical stuff, but overall, right, nobody appears to have many positions in the gold market or the silver market. So sentiment, for want of a better description, is very low. So when we talk about this, we talk about the divergence, right? We talk about the divergence between what people are thinking some days and what's actually happening. Here's another example of this, right? Go look at this chart over here. Okay, what we're looking at here is the disconnect between what people are thinking about the economy, light blue line, not as good as it was, still starting to struggle a bit, don't quite understand what's happening, let's blame it on 64 different things, but life isn't quite as good as we thought it was 2 or 3 months ago, and their investments in stocks, which are full on 100%, 120% turbocharged, amazing, the market's going great, no problems at all, we see no earnings recession on the horizon. Okay, this is called a disconnect of sentiment. Okay, something's going on there. We did a piece a little while ago on sentiment, right? And the sentiment cycle when it comes to stocks and where we are. So think about this in your head. We're looking for signs, indicators, early warning signs. Who knows? We're not calling a top. What we're calling is a go, okay, and that's what we're looking at this time. Let's go look a couple more. I wonder what else I've got to show you. Okay, the bond market, which, as people sometimes forget, especially those who trade Tesla, bonds are quite large in comparison to stocks collectively. You think there's a lot of money in Tesla? You haven't seen the bond market yet. It's enormous. Think 20, think 30, think 40, think $50 trillion, right? In that bond market. It's enormous. It is the elephant, however big that elephant needs to be in whatever small room you've got. This is where it is. So what's really interesting about that, again, we're looking at sentiment, right? What is everybody saying? we are pessimistic about the outlook for bonds. Now, I wonder why that is, because apparently, apart from me, the world and Geoff Snyder out there at Alhambra Investments, the world believes that inflationary is far from transitory. It is now becoming persistent. We bump up to 5%. Everybody believes it's the end of the world. Trust me, 50% is a problem. 5%, So let's see what happens about whether it's persistent or not. Right now, two things are important in that debate. The bond market 10-year yield is sitting at 1.7% while inflation's at 5.5%. Who knows better, the inflation market or the bond market? My money is always without a shadow of doubt on the bond market. We've seen the scares before, right? We've seen inflation bump up 2 or 3 times. Don't believe it. Okay, and what's really important about this is nobody owns these, right? Collectively, people are negative. When they're negative about it, they're not putting money into it. When they're not putting money into it, sentiment's bad and it sits in a really bad place. Now, this might not be the bottom in bond prices, the high in yields, right? We may have to move a little bit further, but think about it, right? This isn't an over-owned, overbought market like DWAC or something like that, right? We're not trading Trump stocks anymore, right? This is really, really, really poor sentiment. So therefore, people are under-allocated to it and that risk being caught by surprise. Let's see what else we've got there. Oh, hang on a second. We've got the oil market. Now, what's going on in the oil market? Do you remember? 2 to 3 weeks ago, this is like a setup. I can't believe we're doing this, right? We did something called backwardations and contangos, right? We have right now in the oil market. If you missed that segment, guys, go look it up. I haven't got time to go through it now. Right now, we're sitting at a significant backwardation in the oil market. What does that mean? It means the nearby prices are higher than the far out prices by quite a large margin. I mean, like seriously big spreads, right? Seriously big spreads. Right now, everybody's bidding for oil, right? That's why the price is so high. Why? Well, there's power cuts around the world. There's power cuts in China, there's power cuts in India, there's power cuts in America, there's power cuts in Europe. Fortunately, we haven't had any power cuts in New Zealand yet, but I'm sure we're going to come because we're always about a year late, and that'll be when it normally tends to happen, right? So the key thing here is that this backwardation in the oil market is a sign of short-term supply shortages, right? And people getting a little worried. In the long run, there's enough oil to go around. Don't worry, we can just pump some more. Ask the Russians and the Saudis to help out. I'm sure they've got a little bit to go if we need it. So what does that mean for the future for oil prices? I don't know, but traditionally into this backwardation, it may get worse before it gets better, but usually you have that going back to a contango, back to a balanced market, which suggests either the back end, those future prices have to rise a lot, or the short-term prices are maybe a fraction too high. Who knows? We'll see what happens there. Last thing I want to tell you guys about supply chain. Do you remember we've only just heard about what a supply chain is? Apparently, it's a brand new product. It's something out there called a issue, right? It's called an issue in the world. How do we know it's an issue? Well, this is a Google mention of supply chains. Apparently, there were pretty much 0 mentions of supply chains for about 10 years beforehand. And do you know why? It's almost as boring as the gold market. However, when we now look at what's going on, supply chains are hotting up. Why? Because funnily enough, the price is up 4 or 5 times. Well, I wonder what that would happen if the gold market rallied 4 or 5 times. Anyway, let's move on, right? Because when you look at this, right, what is the sentiment saying here around the supply chains? Right now, are you in the overconfidence phase? Are you in the exuberance point? Who knows? But certainly having mentions like this on Google is a sure sign that we're probably getting to the end of the journey. Guys, that's all I have for you this time around. But just remember, when we're always thinking about the sentiment cycle, we have to keep coming back to this over and over again. Look for things where nobody's talking about it and nobody owns it. Maybe it's time to get involved in that. Whether things are that everybody's talking about and everybody owns it, I think you know the story there. That's it from me, Paul.
Cheers, Julian. Thank you very much for that. Really appreciate you coming in again. The weather in Auckland's a little bit warmer than it is in Awakuni tonight. So I've got to say, if it's around 20 degrees up there, it's a little cooler down in Awakuni.
And I appreciate, Gary, thank you very much for recommending a hairdresser for me in Sydney. Unfortunately, that's a little bit too far for me to go to a haircut. It involves 2 weeks of quarantine as well, too, on the way back and on the way there. So for a 5-week journey, although that's a relatively cheap haircut, Gary, thank you very much. I'm afraid I might have to wait a bit longer.
We could do a fundraiser. Right? Yvonne could shave your head and we could do a fundraiser. We could raise some money for Cure Kids. I think we'd go real good, mate. Right?
We could. And can I just put that one straight to bed right now? No. I'll do something else. I'll get the scissors out myself. Actually, no, I won't. Hopefully, guys, when my ponytail comes up, then it'll be awesome, and you can all get a picture of that before I ceremoniously have it cut off in 4 weeks' time.
No ponytails in our shows. Thank you very much. Rightio, thank you very much, Julian. We're going to talk fundamentals with Alexis soon. Obviously, one of the things that drives the currency market is fundamental outlooks. Our expert is Alexis. Alexis, what can you tell us about fundamentals in the week ahead?
Well, before we go into the fundamentals, I just would like to say my mom used to cut my hair. So, if an outside option is not available, Julian, maybe your wife could do it.
Not only would his wife love to, but both the boys would love to cut his hair as well. And it'd be fun to see the outcome. It'd be zigzag like that. They'd have a great time, wouldn't they?
Yeah. All right. Okay. I got an article to share with everybody, and this is one of the article. And let's talk the US dollar. All right. So I'm just going to talk a little bit about signorage. I'm not sure if that's how you pronounce it. How does the mint profit, right? How does the mint make money? So basically what happens is the US Mint is like a factory. It buys metal, stamps it into coins, and then sells those coins to the Federal Reserve at face value. So this profit that the mint make is called signorage, and it goes to the person known in the middle, the person in charge, and currently this is Janet Yellen as America's current signer. So when the Congress runs on a deficit, right, she has to figure out how to produce new money, to produce new dollars, to kind of make it profitable for both the mint, i.e. the Fed, etc. Right. So the question next is, will the US still be continuing to print USD, or what is the alternative? The alternative will be actually treasuries. So treasuries are like a kind of dollar because they trade like money. And a lot of focus is now currently on the bond market, the treasuries, as Julian shared earlier. So the question is, with the will the US actually raise interest rates? Will this issue, right, that is difficult for the US to kind of print money right now, does this mean that they will slowly, I wouldn't say reduce the supply of USD, but stop printing as much? Will that make the supply of USD a little bit more desirable in terms of scarcity? So I think that at the end of the day, the treasury isn't just a token. It's like a promise of American faith and credit, right? Because it's sold in markets. It's actually tradable. So the question is, if the treasuries are like an asset, right? What is Janet Yellen's next step, right? How do they move forward if they need to kind of find a way to kind of print more money and also keep the value of the treasuries in check? Because I think the next thing is, money is actually flowing out of standard. I think that it's kind of flowing away from gold. It's kind of flowing away from traditional assets like treasuries to go into Bitcoin, right? And I think there are a couple of articles that came up online that talk about this, about how hedge fund managers, they are exploring Bitcoin, they're looking at Bitcoin. Whether or not they're buying, it's a big question mark. But how does this asset class start to attract more attention, which also ties into, what do we need to buy Bitcoin is still the US dollar. So a very clear, I think there's going to be a clear shift in asset desirability. We do have the old school traders, probably the fundamental traders, the older traders that will look still at gold and treasuries, but they're also the new wave of younger traders who are more in tune with the crypto markets, the NFTs, and they actually look at these like assets, especially as the governments and countries of I think different governments are slowly coming together to kind of start regulating, start kind of having eyes on Bitcoin. So the question is, how long will this shift last? And, how do we then trade this so-called transition in asset class perception, right? And when I talk about asset class perception, I think I'm just going to segue into this article that I'm going to share with you. And something interesting that popped up last week, it's currency manipulation. So why it interests me is really, really simple. Again, perception, right? So the perception of currency manipulation is really simple. I'm just going to show this screen where it says very nicely there, Singapore, 20.3% of foreign exchange intervention. So I think it's not a strange thing. I have mentioned it a couple of times that the MAS, the Monetary Authority of Singapore, does regulate its currencies in this format. So if we have a kind of perceived, if number one, interest rates do go up for the Fed, if treasuries are kind of going down in appeal for people who are buying treasuries. Then my question is, how do we then trade the USD? And among all the US dollars, I'm coming back to home in Singapore. How do I then take advantage of where price is at the Singapore dollar? So what interests me is really simple. This is a weekly chart, and I have the vertical lines, which is the end of the year, right? So my question then is, because USD Singapore dollar trades in a very tight range. And what happens is it ranges and then it moves, it ranges and it moves. So I'm trying to identify whether or not we are entering into Q4 of 2021, going into Q1 of 2022. Will we then see a breakout of this range? So we have 2010, we have a move this way, we have end of the year, and we have somewhat a little bit of a move. We have some kind of move, be it one directional or be it a reversal depending on price. So we do have these moves that we'll look out for. And what I am looking for is this moves, right? Because this is a little bit more, I would say it's a bit clearer in terms of end of the year, it does something. So I am waiting for positions like this. And if you can see over the years, right, the trading range for dollar Sing has tightened, right? You can see that it's tightened significantly over the years, minus this is the COVID year. And back in 2021, 2022, you can see the dollar Sing barely moved anywhere. So the question then would be, if it barely moved anywhere, how then do we take advantage of it and pick a direction? If I go all the way to the daily time frame, and let me erase all the scribbles out, right? And then what I'm looking for on the dollar Sing is just simply the levels, right? So we have the 134 level, we have the 132 level, and somewhere back here we have the 131 level. We have a high level about 137, which was the highest it ever reached this year. And of course, all the way from 2020, we have the 140 level area. So if we look at directional, and if I say again, if interest rates go up, I think the room for the upside is a lot more than the room for the downside. The thing now is, how do we trade it? How do I find entries into it? So I think a lot of patience is needed for trading the US dollars. And I'm still long-term a bit more bullish on the US dollars because of the levels as well. So once the interest rates have been decided, once they have decided to pop up the interest rates, then I think those are really good times for buying opportunities among the various USD, just based on the levels. And yeah, focusing mainly on dollar Sing because we're entering Q4 and it is at a 134 level right now. So I'm just wondering whether we could take it on the shorter time frames up to the 137. And that's all from me, Paul.
Cheers, Alexis. Thank you very much. Always great to get your view on the markets and what's going on. I do like that Sing dollar bounce intervention, and that is very likely, I would have thought, over a period of time. Rightio, next up, we're going to have a look at key data on a currency. Traders use a lot of things in addition to fundamentals. They use COT and they use seasonals. And Ash, our expert, looking at cotton seasonals. What's shaping up this week in the cotton seasonal world, Ash?
Well, I think it's actually quite an interesting dynamic this week, because the most notable that caught my eye straight away was the yen. And we know what, when we see the yen at high levels, or certainly when we see the yen rally, what that does tend to suggest about the overall kind of view of the stock market and the overall view of global risk. And it tends to suggest that the global risk is increasing and there's a bit of nervousness out there. But when we compare it to, this would be risk off, if you like. But if we compare it to risk on, which would be the Aussie dollar is still relatively high, 80% up here. So really, we may well be having this situation where people are hedging their risk out by buying some Japanese yen without actually selling the bullish run that we're seeing in equities and some of these kind of firmer currencies. So that's the first thing to know, which basically suggests that you want to kind of stay with the trend. If you are in a currency or in an indice which is relatively bullish, the suggestion right now is stay with that, but just be careful of it. And obviously the best way to be careful is just by maybe tightening up stops to a level where you don't think they'll get hit in an uptrend, but you're still kind of tight enough not to lose a lot of money if it all of a sudden just starts to roll over. If we start looking at some other information that could give us that. Now, we did say we'd look at Bitcoin this week, and I think it's quite notable about Bitcoin. 60% on the index, on the 3-year index, which is not bullish or bearish. It's kind of in between. But the key aspect that I see here is the longs have decreased by 29% and the shorts have increased by 79% over the last week. And if we have a look at the COT data here, what we've got here is this is the short. These are the shorts here. And when the shorts seem to increase and the longs decrease, and they're effectively moving completely in opposite directions, then it does suggest, it would normally suggest that there would be some kind of easing. Now we have to be careful because of things just ranging for a while we get a definite signal. But if we look what happened here, the longs were increasing, the shorts were decreasing. If we go to the chart, the next thing that happened was a pretty decent rally. Now we are at these all-time highs on the COT data, on the price action for Bitcoin, with this reversal bar here. And this reversal bar would match what we really saw in the last couple of weeks. So this is saying be very, very careful buying Bitcoin at these levels. And it may even be saying don't buy Bitcoin at these levels because there's a chance that we could get a retracement. Doesn't mean that the trend is reversing, but it does suggest that maybe if it comes back down to this area around about the 50,000 mark, that might be a better buying opportunity than where we are now. Doesn't suggest it's going to be pushing through. Now, the last thing that I will cover is the US dollar, because everything kind of links back to the US dollar. And the US dollar is still very bearish. It hasn't really moved too much in the last few weeks. So the pressure for downside in the US dollar is building. And if we bring in the seasonal pattern here, the seasonals are suggesting that when we hit November, we would start to see some downside before around about the 3rd into the 4th week. Then we start to move back into positive territory. So I've just totally lost my my computer screen there, but it's not a problem because we managed to get saved here. It's locked on here. So I can't move my mouse, but just looking at this, and this is the last thing that we were going to look at anyway. It is suggesting that the dollar longs don't really come into play until we see that COT data improve and until we get into around about the 3rd week in November. So that kind of then starts to link back to silver. It links to gold. It will also link back to Bitcoin in some way or another as well. So the COT data this week is suggesting stick with things, mate, if you're in, but initiating new positions maybe not the wisest time to do it.
Cheers, Ash. Thank you very much for that. Always interesting to have a look at what the COT data is saying. There are people watching that Bitcoin stuff with a lot of interest. It's one of those things, I think, because the move in Bitcoin is so big, it's really hard to decide when it's gone far enough, and when you just got to, hit your toe by to it and go, and when you've got to get the heck out of it because it is going to roll around. When it rolls around, it can roll around in a heck of a hurry. Thank you very much.
It's one of those situations where you wonder whether it's kind of buy the rumor, sell the news, isn't it? I mean, we got the ETF now, really positive, but how often do we see the positive expectations eventually come to fruition and then people start taking profit because it's a great place because there's lots more liquidity there. The retail traders without the finesse start to get in, and the institutions say, let's take some money off the table here and we'll get back in a little bit lower.
Yeah, I think that's very possible, mate. Cheers for that, Ash. Thank you very much. Next up, the Golden Girl. We've got Ainslie to talk gold. Had the best, one of the best trading records I've seen last year, trading gold, and Ainslie's still reasonably bullish on it, aren't we?
Slowly. I'm not. Look. Let's have a look at the gold chart and just leading on from where Ash has just presented me with a beautiful segue at the moment. As you can see, gold on my daily chart has been just trading sideways between two major levels of support and resistance since June. Okay, so it's a long time to be going sideways, especially at this time of the year. But we have, as you can see down on the 4-hourly chart, look at this. We've had a lower high. We've had another higher low, and a higher low. So we are sort of heading in the right direction until somebody speaks, like Fed Powell, or somebody releases some data. And at the moment, because gold is basically unloved, it's really feeling the fundamental and economic data announcements are really impacting how quickly the velocity of the move anyway. So you can see it just go bang, 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 up, down, up, down, up, down. And just looking at it on a daily chart, it's hard going, let me tell you, because it's a lot of false starts happening here. At the moment, we're looking at seasonally, as Ash was just saying about the US dollar, it should look like it is due for a bit of a move up and before it comes off again in November, which is where I'm sort of sitting now. It's about 4 weeks out for me to start getting really excited. Expect a bit more chop. I think there's going to be a bit more of a grind higher, hence my very optimistic, that's where I think it's going to go. But I've got to wait, and I've got to wait for a clear break of this line of the 1833 level, because as you can see, 1, 2, 3, 4 attempts to get through before it came back down and then just retested these levels. It is getting a little bit boring. I couldn't disagree with, it's just, it is hard yards at the moment. But look, this is where we're looking at. We're starting to see a little bit more of a turn up on the daily, definitely a bit of a turn up on the weekly charts as well. And we can only, because we're just still sitting in the middle of this consolidation pack, all we can do is sit and wait until we have a really nice clear break. We can trade it up to here, but once we get to that 1830 level, unless we have a clear break, retest and a takeoff, at the moment we're just on the grind. And that may be having, if you want to trade gold, it may be that you have to look it down on the 4-hourly chart. Well, that's all I've got for the moment on my dear friend gold.
Cheers, Ainslie. Thank you very much for that. And look, one thing about gold, loves to do a bit of sideways stuff. When she comes out, she likes to come out pretty hard. So hopefully she'll give us some a nice finish off to the year ahead.
Hopefully.
Next up for us is our cryptocurrency expert, Shukri. He has recorded his session, so I'm going to get Maya to play this. If you're interested in all things Shukri, all things crypto, Shukri's the man you want to listen to. Maya, able to play the Shukri recording, please? While Maya's clearing that up, really good to see so many people in the room. Good to have so many of you guys in, as well as on YouTube, Facebook, Twitter. It's great to have so many people with us tonight. So do enjoy, make some notes. That's, there's a lot of information in these sessions. Make some notes, record some stuff. What we're trying to do here is give you a chance to be really, really clear for Monday morning. So make sure you take the notes so you're able to do that. Let's go to Shukri and his recording now. Thanks, Maya.
Welcome. So before we go to what BTC is doing, let's see Plan B. Remember this. September 43 check, October, it has to close around 63, November 98, December 135. So let's look what happened today on BTC. The weekly closing is above 60. This is great. That means we have a good chance to go to 63. So if we go up, I expect October to close around 63. If we go down, I expect October to close around 63 also. Following Plan B, he's been very accurate. Ethereum is also above that trend line. Why is this so important? Because it also keeps the narrative of the double bubble of 2013. Look at that. This is 2013. We were hit, and then we were dumped, and then we went up. That's a lot. We went up by a lot. And if we do the same thing, look at the monthly bars. They're almost the same. If we do another double bubble in 2021, this actually goes off to 300 something. I don't think so. I think it goes to a half of 300, which is 150, which is close enough to Plan B's 135K. Let's see what happens as we go towards the end of October, whatever it is. You guys been in airdrops. There have been great. There are many more coming, and we do have an event on airdrops next week. See you then.
Thank you very much to Shukri for his insight into that. Crypto is fascinating at the moment, as always. So, Ainslie, we're going to talk oil now. And as long as gold has been going sideways, oil has been going up. And is that likely to continue this week?
I think so. Which is good. And Julian touched on this earlier with oil and the backwardation, and which meaning the spot price at the moment is a lot higher than the futures price. But let's have a look what happened during the week, because we're starting to get nosebleeds with how quickly this has been going up since, and solidly since the beginning of September, after it sort of like had this little area of consolidation, broke out, came back, retested the level of the breakout, and then continued on at these dizzying heights. Fundamentals, we all know that with oil, it is very fundamentally sensitive. So people making comments about how they're going to increase or decrease production has really, really made a mark on the way that oil moves. I was nearly going to say gold there, the way oil moves. But at the moment, what we've got is, Julian touched on it as well, is how many utility companies are absolutely closing down. And we're not talking just India, we're not just talking the UK, we're not talking, nearly every country has got a bit of an issue with energy and fossil fuels, especially with oil. And so at the moment, we've had this fabulous week of consolidation. I always like a good consolidation on oil, because then we always seem to get this, as I just showed you here back in September on the daily, we get this really good push forward again. What's stopping it? We've got a Northern Hemisphere winter on our doorstep. We have got insufficient supplies to actually allow people to heat, to do whatever they need to do. So natural gas is also under the pump, and as is oil. And whilst they've been asked, OPEC countries have been asked really, really nicely to increase their supply so that they can take a bit of the heat out of the cost of these commodities, but they have politely declined at the moment. They have decided that they really do like the price up here a little bit higher, because people are still buying it. And whilst people are still buying it, you can see this continual push upwards. We don't see a changeover. If you want to be really technical, we see that the DI plus is well above the 25. It's off the Richter scale here, down here on the ADX. It's showing its strength. Do we expect it to come back and retest if it does break out at these levels? Absolutely. That's the way that it absolutely has always moved. So we've had a week of consolidation last week. The pressure is still there. The demand is still there. The supply is not being cut. It's a very, very basic equation. I do expect to see this to keep moving up between that 85, perhaps we will see it up around the 90 mark by the end of the week, Paul. Who knows? Or the next couple of weeks. Although that's a really dangerous thing, putting a timeline on where you think it to go. But when you look at what you've seen in the last week on the 4 hourly and where that's going, it's I can't see it. I can't see it coming back down to 75 tomorrow.
Yeah, I think that's a fair opinion, Ainslie. Thank you very much for that. Now we've had a look at macro markets with Julian. We've had a look at fundamentals with Alexis. We've had a look at the most important data with Ash. We've had a look at gold with Ainslie, oil with Ainslie. We've had a look at crypto with Shukri. Coming up, we're going to have a look at currency indexes with Lloyd. We're going to follow that up by some US dollar, especially stuff from Orlando. Stay with us. We've got Gordon Scott on stocks, and we've got Geoff coming in to do the traders, the technical analysis, his 2 cents worth. Lots to come, so make sure you join us for all of that. Starting off, Lloyd, I always look forward to this part. What's the currency indexes telling us this week?
Hi, Paul. I'm just going to go through the 2 trades which I took last week. Both of it actually didn't trigger, which is a safe thing for me. Yeah, so last week I actually didn't take any trades off the currency index. Now for this upcoming week, market looks a bit messy to me. Yeah, so going to be a bit kind of conservative going about it. Now, what this week shows to me is that interestingly, I deem that actually British pound should have more strength going forward. No doubt it's in a range, but it's actually bouncing off nicely at the bottom of the range. So going by this and looking at the price action, it should have enough strength to go all the way back up to 140, possibly beyond, but I'm not banking on that. But at least to the 140 level, it should have enough momentum to go through. Now, the Swiss, again, for the last 3 weeks, I've been saying that price would be actually traveling back up towards the horizontal level, which is at 110, and to the trend line. So this would be a good area for us to look for any reversal. But till then, I'm still banking much on the strength of Swiss. Now, Euro, you can see that price very nicely broke the horizontal level, possibly coming back for a retest. Yeah, so it should have a bit of space to coming back. But on saying that, it doesn't have really a lot of leeway to do that. So I'll be much cautious on trading the euro currency for this upcoming week. Now again, dollar, it broke, broke the horizontal level, but not in a very strong manner. Seems to be coming back to test it. But usually such a weak retest, I would tend to stay away from it. Yeah, not usually the way that I trade it, I would hope for price actually does this. Yeah, it does not have a very, very nice curvature. So it seems that the dollar bulls are ceding some space out. Yeah. So again, the advice is that if you don't see a very clear-cut strength, try to stay away from the movement. CAD. So last week we say that the currency of Canadian dollar is riding on the strength of the oil, I suspect. But whichever that is, it did actually break the horizontal level, still maintain above it. Yeah. But we can clearly see that the price action that is on here isn't a clear-cut sign that the bulls are in control. So I do suspect that they may come back and retest the 80 levels before we can see any very clear-cut movement of where it wants to go. For all we know, this might actually just be a false break, and then price might actually just whack back down again. Yeah. So again, this is not a very, very clear sign of where price wants to go. Kiwi, troublesome pair. Overall, it does look as if it's sloping down, but I wouldn't really bank much on this movement because another picture that we can see that price is really ranging. Yeah. So this is a very tight range that is much more harder to trade. Yeah. So I much prefer to actually trade in a range. If it's larger, then you have very clear-cut boundaries. Yeah. For prices like this, I tend to stay away until it gives us clarity where it wants to go. So looking at what Kiwi is doing now, I may very well be staying away from Kiwi for the next 4 weeks or so until price actually does this, or does this, which is on the weekly time frame. Then I will have a clear-cut direction as where to trade it. Yeah, tight ranges are one of the hardest condition for me to trade in. Now, yen is interesting. So last week I mentioned that yen might be on a free fall down, but I was obviously wrong. So it tested the 88 level very, very nicely and seems to be bouncing, but not really bouncing. It may just be a retest before it actually follows its momentum downwards. As such, this coming Monday and Tuesday, I'll be very interested in looking at yen. Yeah, so if on the 4-hour time frame, we can take a look at 4-hour time frame this moment. Yeah. So this is actually what happened on the 4-hour time frame. So if price actually maintains below this level and decides to actually pop back down, I think we'll have huge momentum behind the Japanese yen. Yeah, so we can actually jump in. But we need to see if on Monday morning they decide to defend this level. If they decide to defend this level, then we might see this instead. Yeah, so for the first 2 candles on Monday morning, this will actually the Japanese yen might be an interesting pair to actually get in, depending on what they want to do exactly. So we can easily pair this with either the stronger currency, the Swiss or the pound, and then we can go for. Personally, when such things happen, I tend to go for a good ride, usually 4 or 5 risk to rewards. And then the weakness of the bunch. Yeah. So last week I was saying that the Aussie currency might come back for a retest, and indeed it is a retest. So I'm looking for any possible short positions for the Aussie currency. Now, for the upcoming week ahead, what I'm looking for is actually to trade pound odds. So we already see pound having a double bottom. So it might give out a triple bottom, but if it does not, I think it's perfectly okay. Always waiting for price for a classic break and retest before I actually jumps in. Yeah. So within the week, the 4-hour time frame gives us plenty of opportunities to observe that. And the next one, which I've been looking for, is actually the Aussie Swiss. Yeah. So price already gave us a lower high. So it already broke the last low. So I'm interested to see if price will actually break the horizontal level and the trend line to see if it's give us a short trade opportunity. So this will be the 2 upcoming trades I'm looking for next week.
Thank you very much, Lloyd. Always fascinating to see how this stuff plays out for you. Much appreciated the sharing. Rightio, next up, Orlando will be on video. He is coming in from El Salvador, Trader O coming in from El Salvador, and it's pretty unsocial time for him. So he's recorded us a video to talk about the US dollar. Mike, can you play the US dollar video from Orlando, please?
Hello traders, Trader O here. Let's talk about the US dollar. Let's start by looking at Powell's speech from last Friday or this Friday. Okay, so he started by saying that the Fed is on track to taper asset purchases, right? So basically, that was the first time, at least on my perspective, on my view, that's the first time that I have seen or I have heard Powell or the Federal Reserve come out this hawkish since the pandemic started, right? That is very bullish for the USD, and that is why we saw this bullish pressure late on the US session on Friday. But then after that, there were some mixed signals because he said that the policy or monetary policy is in a good place. So even though he started his speech very hawkish, he ended up saying absolutely nothing. And as you can see, the DXY stayed within that range. Now let's come back and let's have a look at some technicals and what I'm looking at for next week. So let's start with the daily chart on the DXY. The daily chart on the DXY keeps its bullish midterm structure whilst these highs hold as support, right? So whilst the 93.40 level holds as support, this should be a very bullish market, right? But on the short term, I have been shorting the US dollar more so last or this week on the break of this flat, right? Now, right now, the DXY is trading in a no trade zone to me or this range, right? But if you look at the previous day's highs and the previous day's lows, you can see that we have flat bottoms and lower highs, which means that we're creating a flat triangle, which could lead to a to further downside on the USD. Now, this is just technicals, okay? So what I'm looking at for next week is really shorts on the USD on a break of the 93.49 level. Now, where am I going to play this? There's a couple of really good setups that are brewing and what I'm looking at possibly are longs on the Aussie US dollar, longs on the Kiwi USD, and possibly shorts on the US dollar South African rand. Now, let me guide you through my thought process, right? Should the DXY break with the 93.49 level or the previous week's lows, right? Um, let's go back to the 4-hour chart. We could actually see um, a we could actually see a bearish move triggered for about 0.5% or half of a percent to the next key level, right? Now, I know that I have here a possible reversal pattern, but again, we are in a no trade zone, so we actually don't know if price is going to break to the upside or to the downside. I really don't have a plan, a trading plan for uh, buys on the USD. My plan is for sales on the USD. And should price break with that 93.49 level, uh, um, the markets that I would be looking for possible buys or sales, I'm sorry, on the US dollar are buys on the Aussie USD, given the fact that the Aussie has been retesting that 74.60 level and holding that 74.60 level, right? And more so because I would be deep buying, right, on a bullish structure. Kiwi, same thing on the Kiwi, deep buying on a bullish structure on that 71.40 level that is holding, right? And the US dollar South African rand, I know it's a little bit riskier, right? But if you notice that 1483, 1484 level is a massive key level on this market. So should the USD, should the DXY break with this week's lows, sales on the US dollar are in play, and the potential on shorts on the US dollar South Africa rand are really, really heavy. So those are the markets that I'm looking for next week. Should uh, sellers break with last week lows on the DXY.
So a new feature there as we look at the US dollar in some detail. We'll have Orlando back each week, or Trader O as we're calling them these days, back each week from El Salvador to give us some more detail on the US dollar. I like the detail, I like the levels. Does give us a pretty good idea of what may happen with the US dollar moving forward. Look, next up we're going to have Gordon Scott CMT come in, and he's also done a video for us on US stocks. Again, we're a global team. We're all over the world, and I don't think at any stage in a day is the entire Actions to Wealth team awake at the same period of time. There's always somebody asleep because there's always someone in a completely different time zone. We've got George in South Africa as well. So Gordon is in the US, and timing of this is very poor for that. So he's provided a recording. Let's have a look at that recording, Mike.
Hey everyone, Gordon Scott here. Just want to give you the weekly rundown of the US stock markets, how they closed on Friday, and how they will likely affect the currency markets in the upcoming week. Here is a look at how the S&P 500, the NASDAQ 100, the Russell 2000 small cap, and the Dow Jones Industrial Average all closed Friday. IWM, S&P 500, and the Dow all at former resistance points. Not looking like they're necessarily going to stop, but the NASDAQ did hit some resistance and come back down. So if it's leading the others, they may find some resistance. However, if they keep punching through, well, it's important to know what's driving them higher. Well, let's look at this next chart here. This is the sectors. This is the relative performance of each of the sectors within the stock market. And the two that are at the top here, these red and black lines coming out, the red line is the financial sector. The black line is the energy sector. Energy, okay? So oil and natural gas and all things like that. Well, why is that important to understand? Because if those markets are going to punch through resistance, it's because energy is going to go higher. If those markets are going to hit resistance and kind of retrace for a little bit, we can expect that the shine will come off of energy. And let's have a look at how that is going to in turn affect currency markets, because it will. Here's a look at the Aussie dollar, Aussie US dollar pair, which has been very strong. And that corresponds with the energy sector being strong in the US stock market. Here's the US dollar, Canadian dollar, big downward trend. That tracks because Canada, oil against the US dollar, right? So if oil is strong, the Canadian dollar is strengthening against the US dollar, this pair is headed down. And here we've got the Euro Australian dollar. Last week I told you about that trade. I had mentioned that you could set up a 40 pip risk trade and have a 100 pip move depending on which way it broke. Well, I was wrong about that. It was a 150 pip move when it broke to the downside. So it was a really good trade setup. I'm really anxious to have another one of those. If the US market continues higher, we'll see the Aussie yen go higher, we'll see the US CAD go lower, and we will see the Euro Aussie dollar also go lower. And so that'd be a great trade to hit. However, I'm a little concerned that that's not what we're going to see, because if I look at the 4-hour chart of the Euro Aussie dollar, this is what it looks like. I see a bullish divergence that appeared just in the past 48 hours, and it looks like it broke higher. The Euro Aussie broke higher. Well, it kind of did that before, but we were anticipating that it was going to turn right around and come back down. On my Monday morning show, I talked about that. But here, what we've got is that it broke higher, and it looks like it's holding. Now, this is just coming to the close of Friday, so we don't really know for sure how it's going to go, of course, but what I'm watching for is this former resistance right at 1.56 on the Euro Aussie, because if that breaks higher, it's a pretty good indication that the US stock markets are going to end up hitting resistance and trade lower on Monday. And therefore, we would see that Euro Aussie pair make a bit of a reversal and have a pretty good strong move to the upside. If, however, this little bit of resistance at 1.56 holds in the early hours of the Monday morning session in New Zealand times, as an example, if it were to start coming down, then you could guess that the U.S. markets were going to move higher, led by the energy sector, which would precipitate more downward trend on the Euro Aussie. So it's going to be a key pair to be watching. Which way is it going to break from its 1.56 level? That's the way the weekend closed, and how next week is likely to shape up. If you want to join me Monday mornings an hour before the U.S. market opens, you will get to see the action for yourself. Until then, take care.
Well, he did nail that Euro CAD trade in this show last week. He did talk about it. So Euro Oz trade gave us an exact what to do. We did exactly as he said it would. And as he says, you can catch on his YouTube show just on the US Open on the Actions Trust YouTube channel. If you're on that channel at the moment, welcome along. Look, I've got a lot of people in the room still. We're going to hear from Geoff. We're going to get technicians 2 cents worth, and I'm going to give a 2-minute wrap on some Actions to Wealth stuff that's going on. Just a little bit of update on a couple of things that are happening for you guys before I head off to the staff meeting, which isn't far away at all. Perhaps someone could post one of the groups at the staff meeting. Will start at 6:35. Rightio, everybody. Off to Geoff now to have a look at the technical view. Then I'm going to talk about a couple of things straight after that. To Actions to Wealth, one of their strategies. Cheers, everybody. Are you ready with Geoff?
Hello, everyone. Nice to be with you again. And let's start this week with this picture, which shows us a few things. I noticed that on both Thursday and Friday, there appeared to be a bit of a market sentiment shift, and the Aussie and the Canadian dollar in particular were weak against the risk off currencies, which of course were the Swissy and the yen in particular. So the Aussie against the Swissy first up, we'll go to there, and you can see that game changer bar on the weekly chart, which is of course something that we do pay attention to. I think I prefer the Aussie yen over this one, and the reason is there may well be a little bit of upside left in this before it does hit a resistance level, bit of a confluence area there through that level at the trend line. So I think I'll be waiting for that one and may prefer Aussie yen, and I'll go through that one in a bit. But again, game changer bar on that. So a risk off currency versus a risk on currency is showing us perhaps the way that we need to be thinking this week from a technical perspective, and maybe even from a fundamental perspective. The Canadian dollar was also very, very similar. And this one's interesting, and I'd certainly be looking at this one as well. We've got a big game changer bar there, bearish engulfing bar at a resistance level. I think a lower high anywhere in here makes sense to me as a short. It's tough to be thinking that without that market sentiment shift, because the CAD, for all intents and purposes, in my mind, is one of the strongest currencies going around the place at the moment. CAD yen doesn't escape this potential market sentiment shift, and also a game changer bar sitting there. Very, very tough to be trading this short, I'd have to say, and you'd want definite confirmation of that potential reversal bar with a lower high, and I'd certainly be advocating that to be the case. The euro didn't escape either. It against the Swissy here. Big game change bar there to the downside, as it was against the yen. Sorry, there we are. Little game changer bar, almost at the resistance area. So interesting. Again, maybe looking for a lower high there later in the week, or maybe Tuesday, Wednesday even. And the pound was the same against the Swissy and the yen. It didn't escape either. The big bearish engulfing bar there, and of course, a game changer bar. And against the yen, similar thing, but again, very, very tough to be going short against that big momentum and big push through the highs of about 156 there last week, the week before last as well. The two I am going to concentrate on are Aussie yen. So I'll go back to Aussie yen and have a look at why that would be my choice if I am going to trade this. Now, I think it's tough to be ignoring the, I guess, groundswell of murmur that suggests that the Aussie is going to rally over time, and I get that. But I also get the technical perspective, which is why I'm here, which to me is that the Aussie yen is very, very near a resistance level. There's a whole lot of confluence going on here as well. So I do believe we're at an inflection point where we're going to see this go to this level here, which is quite some time in the distance. I'm on a monthly chart here. So this could, go anywhere in the meantime. And shorter term, I do see a strong resistance area here. There is a horizontal level running through here as well. And of course, we're underneath that trade line of mine. So I'd be expecting a little bit of a bounce here at the very least. The weekly chart is showing that more graphically. And of course, as I pointed out earlier, we do have a game changer bar there as well. And everything seems to be under resistance at the moment. So I am thinking downside. Where that leads us in terms of the next particular level is probably questionable. It could be here, probably there, in my humble opinion. So around about the 82 mark, you've got a couple of 100 or 250 odd pips before you reach that level. It certainly won't upset the recent cyclicity, which is upward. So that does go into what I suggested before, that maybe we do fiddle around in here for a fair bit, come back to that level maybe, and then push on towards this area up here. That would make sense to me. So as far as trading it this week is concerned, well, it's pretty simple for me. I do have that bearish engulfing bar there. I'll be looking for a lower high in this vicinity, maybe as a retest of that bigger picture trend line, which is coming off a monthly chart. So that's precisely what I'll be looking for on Aussie yen early. Well, not even any time this week will do if we do get that that lower high sitting in there. That's a 4-hour chart that I'm looking at, suggesting that perhaps we are going lower low, lower high, lower low, lower high in here. Makes sense to me. The other one I'm looking at is euro pound, and I won't work backwards. I'll go back to the monthly chart here and show you exactly why I think what I think. Not necessarily committed to a direction here at the moment, but I don't need to be. I'm hoping that the candles will tell me exactly what's about to happen next. And on this monthly chart, that would appear to me to be long euro pound, but it's not that clear cut, because if I go to the weekly chart, I see that we have broken through the bottom of that range and now retesting it. But not only the bottom of that range, there's also a horizontal level. Of course, it's the same level, around about the 84.50 mark, but also this descending channel that has been clearly false broken, or in my humble opinion, clearly false broken. So we've broken it. We've consolidated for the longest time, like 2, 4, 6, 8 weeks outside of that. Now we came back inside it, breaking the horizontal level at the same time, and then retesting. Haven't quite retested the top of the channel, but if this is to regain this downward momentum of the previous 3 weeks prior to last week, that is, then perhaps this little ABC scenario will play out and we'll get price back down to that level there. As I said, I'm not committed to any direction at the moment. Either one would do, but we're in most definitely at an inflection point, in my humble opinion. If we go down the time frames, the daily chart suggesting that we're in a box range, and the 4-hour chart points that out beautifully. So here's your inflection point. Again, similar to what I described on Aussie versus the yen, it's either break, retest, go long, or it's look for a lower high now and go short. So pretty clear cut as to what I need to look for on both Aussie yen and euro pound, and I'll be looking for those as of tomorrow. I'll probably be looking for trading them on Tuesday if I get what I've actually asked for. So for this week, those two are my 2 cents worth. Have a good one.
Cheers, Geoff. Look, amazing effort by the team. We're through right on the hour as well. They've done great in exactly 60 minutes. Good on them. while there's some depth in there for you guys to go back and have a look, make sure you've got a pen and paper for these sessions, write it all down and make sure you join us every week as the team gets into these markets and starts to really dissect them and give you guys some differing views at them. Look, in a couple of minutes or in a minute or so, I'm going to talk a little bit about some actions to wealth stuff. So if you want to stay for that, you're welcome to stay for that. And if you don't, you're welcome to leave if you're an actions to wealth person, if you're on YouTube, etc. In fact, I might get you to end the stream if that's okay. This can be kept for the webinar. Now, look, I just wanted to give you guys a bit of an update on a couple of things. And I've talked this a couple of times recently, but look, we're going through two things that I think are really interesting for everybody involved in the company. Maybe there's a few more that'll come out in the next couple of weeks. There's quite a lot going on at the moment, but we're preparing for an IFP next weekend. And we've been doing back testing on the wave rider again, the daily wave rider. We've been back just going through everything step by step. Markets are ranging, so it's a bit different because it's a good chance to have a look at the data in a different way. But with some help from Lloyd, we've come up with what I think might be one of the most important enhancements to the daily wave rider strategy we've ever made. And look, there's been some stuff we've done recently which has been brilliant. But what we're looking at the moment is providing us not only slightly more profits, but it's pulling the drawdowns back quite sharply. So we will be continuing I mean, testing can change, but right now it looks really good. We'll be continuing to test it all week until we've got the team have worked all weekend, all kinds of hours, as we just keep pushing at the stuff to try and get every inch of benefit we can for you guys. We'll teach it on IFP this week, and then the next couple of weeks we'll do a short session with you guys. All the daily wave rider clients can come in and have a look at this. We'll teach it to you guys for free, obviously, as an enhancement to an existing strategy. So keep an eye out for that. And if you haven't been in the membership pathway, you've been trading the hourly or the 4-hourly wave rider, you will already know that across Hunting Dog, Falcon, and Jaguar, hourly and 4-hour wave rider combined for the last 30 days up 100%. So that's based sort of the robot, so no enhancements, just trade the strategy by the rules. Look, there's some stuff happening in today's charts that's quite interesting at the moment. Don't quit your job and start trading at 30% or anything, but if you're looking for some stuff, there's some really good solid stuff at the moment. So make sure you're in the markets. And there's times for traders to be, in my view, quite conservative. There's times you want to be in, and I think right now is the time you probably want to be a little bit more in the market. Now I'm going to go and have a chat with the Actions to Wealth trading team. You guys have a wonderful Sunday evening. Remember, guys, stay calm, and if you do, and make good decisions, and if you do, at the end of the day, everything will work itself out. Cheers, everyone. Have a great week. Thanks for your time. I'll see you next Sunday, same time. The whole team will be back. Wow, wasn't that a great session? Wow. Thank you, guys. See you next week for more. See you.